Good morning. This is Horizon's Middle East and Africa. These are your top stories this morning. Investors await U.S. inflation data for fresh clues on the magnitude of next week's expected Fed rate cut. Chinese biotech firms in the crosshairs after the U.S. House passes a bill blacklisting them and their American subsidiaries. Plus, Apple unveils its latest iPhones featuring modest hardware upgrades and AI technology that isn't quite ready yet. Well, it's just gone 8 a.m. across the Emirates. It is 7 a.m. here in Saudi Arabia. Anjumana Versace still in Riyadh, and we are going to be heading out to a semiconductor conference later on, which explains why we're here. But for now, let's just turn to these markets to get an assessment of how things are. And again, some more stabilization coming through yesterday. Equities ending up in the green. Today, the picture is slightly more muted. You have the S&P futures leaning towards a slightly negative open, but only marginally so. All eyes are going to be on that CPI print. We will talk more about that and the impact that that could potentially have on markets as we get closer and closer to that Fed meeting. The decision is going to be a big one next week. 10-year yield sitting at 3.71. So again, continuing on with that rally that started around the JOLTS data about 1 week ago. That was the catalyst for a 20 basis point move lower. Since then, we've steadily dripped lower as well. The market still splits on whether the Fed go for 25 or 50 next week. The USD trading sideways today, though marginally firmer on the session, up about 6 basis points. And then Brent also in focus, still sitting at around $72 here, slightly weaker on the session. But another factor to think about that could affect the outlook for oil in the short term is this storm Francine that is hitting some of the shores in the Gulf. So some things to bear in mind as you think about the trajectory of oil and potential supply disruptions too. But another major event that we're watching out for from the political perspective is that widely anticipated debate that is set to take place between Harris and Trump tonight. And just here is a little bit of a preview over how the polls have evolved over the course of the last few weeks and ever since Harris announced that, or it was announced that Harris was going to be the Democratic nominee for presidency. And if you look at the average polling, this is just average because obviously it varies from poll to poll, Harris is still maintaining her lead over Trump, though it is razor thin at this point. It is a very, very tight race. So the debate is going to be crucial for where these polls go from here. All right, enough about U.S. politics. Let's continue talking about markets. We've had some key data come through from China. April is there on standby just to give us an overview of how these Asian markets are faring.
Yeah, the data you speak of is on China trade, and we're actually seeing the Asian giants' exports unexpectedly picking up in the month of August, and a rare bright spot for the economy at a time when it's really struggling with these lingering deflationary fears. And indeed, I think that is why, despite the beat on the data, you're seeing the CSI 300, even before entering the lunch break, that is when we got the data, actually slumping still about 0.5%. And this is amid the data a day ago, CPI, PPI, really reinforcing these concerns about the Chinese economy. Indeed, if you look at the mainland gauge, it is headed for its lowest close in about 5 years. So that is what we're keeping an eye on. Elsewhere, rest of Asia looking pretty range-bound as they have their eye on the Kamala Harris, Donald Trump debate, but also the US CPI numbers. Jumana.
Avril, absolutely. So let's talk more about those CPI numbers and what they can mean for markets. That was Avril Hong in Singapore. U.S. consumer inflation expectations have stabilized in recent months ahead of the Fed's highly anticipated rate cut next week. Let's bring in Frederique Carrier, the head of investment strategy at RBC Wealth Management. Good morning to you. Good to have you with us on the show. It just feels like we go from one event to the next, looking for clues on whether the Fed are going to cut 25 or 50 NFP. That's out of the way. Today, everyone's going to be focused on those CPI numbers. How low does the number have to be for markets to come around to the view that maybe the Fed will opt for a 50 basis point cut next week?
Look, in our view, this scenario is relatively unlikely. Already last Friday, Governor Waller has poured water over this idea. We think that the Fed will go more with a 25 basis cuts. There is a case for, of course, 50 basis point mostly because of the beige book last week, the non-farm payrolls growth, which was a little bit below expectation, as well as previous downgrades. But overall, given Governor Waller expectations, comments rather, last Friday, we think that it will be at 25 basis points. And we think that the discussion will move very quickly away from 50 or 25 basis points and more into how deep will this cycle be. And there we think that the market is slightly ahead of itself. While we think that a 3% Fed rate at the end of next year is possible, less likely by mid-year next year, as the market discounts at the moment, unless there is a very deep recession.
Yeah. Okay, so a lot of views that you put out there. Let's just start with Waller and what he was saying, signaling that the Fed are probably leaning towards that 25 basis point cut. It feels as though the market actually placed a lot of weight on his words there. But should the Fed actually go for 50 basis points, how do you think the market will read it? Will investors interpret it as the Fed genuinely being scared about the state of the U.S. economy? Or is there going to be an understanding that perhaps they have to cut 50 because rates are getting more and more restrictive as these inflation numbers start moving lower? Real rates are still very high.
So I think that maybe a month ago, a 50 basis point cut would have been perceived as a bit of a panic from the Fed, with investors wondering, what does the Fed know that we don't, and how bad is the situation? But given the numbers we've had, particularly last week, I mentioned the beige book, there's increased anecdotal evidence of the consumer starting to withdraw a little bit as financing costs are high, debt costs are high, and as the labor market is softening. I think the market would probably take it on its stride. And again, the discussion would move from this initial first rate cut to what will the cycle be going forward.
Yeah. Yeah, well, another pivotal event coming up. We've got a debate this evening, very important debate for not just Americans, but everyone around the world, because it will probably determine, or at least set the stage for one of these candidates to make some gains in the polls in the next few weeks. How are you thinking about trading into and out of the U.S. elections? And are you discounting the possibility of a potentially contested result?
This is something that investors have to keep in mind. Definitely. Usually in election years, the fourth quarter is a strong one. There is one exception to that behavior, and it is the year 2000, the contest between Al Gore and George W. Bush. The court case, the recounting, and the S&P actually fell 12% in that period. Now, granted, in that year, there were other factors at play, but nevertheless, this uncertainty made investors very nervous. So given how close polls are, it's something to keep in mind. I think we do expect a lot of volatility in U.S. equities, perhaps even in the short term. September and October are sensitive months. There's a lot of buyback programs which are ending mid-September. Buybacks have been a very powerful force for U.S. equities. So we expect volatile times and tell our investors to be well diversified and focus on really high conviction calls.
Yeah. Well, it's not all about the U.S. We've got another big central bank meeting coming up this week, the ECB. And again, the market there is pricing in the possibility of an interest rate cut. But the dynamics are a little bit different in the Eurozone economy. Growth is weaker, but services inflation is proving to be a little bit stickier. That puts the ECB in a slightly more challenging position than the Fed are in. How do you think they're going to respond, not just at this meeting, obviously, but in the months ahead?
So we expect one rate cut at this meeting, potentially another one in December and one in 2025. There is room for another one, perhaps a second one next year, depending on how weak the economy is. The European economy is more slow growth than less dynamic than the one in the US. But we expect a much shallower interest rate cycle cut than what we expect in the US.
Yeah, that certainly appears to be the case. And that's going to have potentially ramifications on where the currency trades. Frederique, thank you so much for coming on our show today. Frederique Carrier, Head of Investment Strategy at RBC Wealth Management. Thank you very much. Well, coming up, Apple unveils its latest iPhones featuring modest hardware upgrades and AI technology that isn't quite ready yet. But up next, Chinese biotech firms in the crosshairs after the U.S. House passes a bill blacklisting them and their American subsidiaries. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh. Now, Israel says its jets have struck Hamas militants in a command and control center inside a humanitarian zone in Gaza. However, Hamas denies it had fighters in the Mawasi coastal area located just west of Khan Yunis. Palestinian news agency Wafa reports that at least 40 people have died and 60 others have been wounded by the strikes, where hundreds of thousands displaced Gazans have been sheltering in tents for months. Chinese biotech firms are in the crosshairs after the U.S. House passed a bill blacklisting them and their American subsidiaries. The bill is one of more than 30 legislative measures limiting ties to China, which are set for votes this week. That's as Republican lawmakers showcase a tough stance ahead of the November elections. For more, Bloomberg's Jill Desis joins me now from Hong Kong. Jill, first of all, just walk us through the bill and what some of the key takeaways are, but also what the likelihood of that bill becoming law is.
Sure, Jumana. So this is really part of a broader push that American lawmakers have really mounted here against certain Chinese companies. In this case, this is really predicated on this belief, this fear that Chinese biotech firms, this is an industry that the U.S. has traditionally been very successful in, that Chinese biotech firms that have maybe some subsidiaries in the United States may be able to use a lot of this technology to develop bioweapons or otherwise capitalize on people's biographical data and stuff like that. So this is part of this big concern here. Now, in terms of the likelihood of this actually becoming law, Bloomberg Intelligence pegs this as at about a 70% chance. Now, if you look at the breakdown of how these lawmakers in the House of Representatives voted, of course, it still has to go to the Senate first and then ultimately would have to be signed by the president to become law. But it came down to, I think, a vote of around 306 to 81 in favor of actually passing this. So it does seem like there's a pretty strong likelihood here. There's a lot of anti-China sentiment broadly that has a lot of support across the aisle, whether it's a Republican or a Democrat. We've seen some pretty anti-China language come out of both of these major political parties. So yes, I mean, certainly some pretty strong attempts there by the U.S. to kind of limit China's scope in some of these fields.
You got to wonder whether China and the debate around China is actually going to feature in tonight's debate. So let's talk about tonight's big debate between Harris and Trump. How significant is it going to be? And is this going to be a debate of character or of substance?
Well, Jumana, this is currently the only presidential debate between Kamala Harris and Donald Trump on the schedule right now. They haven't agreed officially to any further debates. So it's, maybe could be this is the only chance that we'll actually see these two candidates go head to head on the debate stage. In terms of significance, I mean, you're looking at, featuring Kamala Harris here. I mean, this is really the shortest, national presidential campaign in modern political history in the United States. I mean, she just became the nominee obviously quite recently after Joe Biden dropped out. So at this point, you're looking at voters right here expecting Kamala Harris to kind of, introduce herself on a broader stage still. Recent polling has showed that around, 30% or so of likely voters actually still aren't really sure where she stands in some positions or want to learn more at least about her. So this is an opportunity for her to do more of that. But yeah, I mean, has some significance to actually sway some pretty tight polling right now as we get closer to the election.
Yeah, I was reading somewhere that there are about 5 or 6% undecided voters still. But let's just go back to what we started this segment talking about, and that is China. And there seems to be some room for bipartisanship over the U.S.'s quite hawkish stance versus China. But then you've also got the war in Ukraine. You've got the war in Gaza. To what extent do you think foreign policy is going to feature in tonight's debate?
Well, Jumana, typically these presidential debates, at least historically, have featured a lot more foreign policy than than in other venues that these candidates have. So maybe there's some opportunity there for some questions to be introduced, specifically targeting those issues. Kamala Harris, as she's started to unveil her policy positions recently, has really focused on a lot of domestic issues. But there's some evidence there that she's really tracking with the existing Biden administration, of which she's obviously the vice president of, on a lot of issues. The Biden administration has been fairly tough on China with regard to some tariffs, some efforts to limit semiconductors, although obviously Trump has vowed, if he returns to office, to go even tougher in some instances. So we may see some, some additional clarity on issues there, on, both on China and then, as you said, the war in Gaza, maybe, perhaps the war in Ukraine. So, traditionally, again, these venues have been something where we can hear a little bit more about foreign policy. Maybe we'll get those out of those candidates tonight.
Yeah. Okay, excellent. Bloomberg's Jill D says, thank you for the overview of what to expect. Now, Apple has introduced the latest versions of its flagship iPhone, betting it can entice consumers with modest hardware upgrades and promises of AI technology that will not be included in the initial models. So the wording is key there. Let's bring in tech reporter Annabelle Jewelers, who joins us now. Annabelle, first of all, let's just talk about what Apple actually unveiled, because it seems to me that we got minor hardware upgrades with only promises about AI capabilities without actually seeing what those AI capabilities are.
Yeah, that's pretty much spot on, Jumana, actually. So the latest iteration of the iPhone to come out, the iPhone 16, we had these new devices that were unveiled just a few hours ago. And as you say, it's not really that much change from the 15 to the 16. A couple of things that are different. So you've got a customizable action button that's now going to be standard across devices. Previously, it was more for the advanced or more expensive versions. So that's something that's a point of difference. It replaces the mute switch. There's a more powerful chip, for instance. There's a new camera control button, so it lets users snap pictures, access camera functions. There are all sorts of the changes. Of course, here you can see the different color schemes as well that's been released. But the look and feel of the product is largely the same. And so we haven't seen any big changes coming through. The focus very much on artificial intelligence. And yeah, as you say, it's really the promises of what will be delivered, given that the capabilities are only going to start to be added gradually to the devices via software updates, starting in the US first and then moving to other regions as well. The market reaction, of course, kind of tells that story, because you didn't really see any sort of moves intraday, late hours as well. Today, the Apple supplies in Asia are looking fairly mixed. And again, it just tells that same theme. We already knew a lot of the details that were going to be unveiled, and so it's not really a big surprise to the market at all.
Yeah, I was just looking at the analyst calls on Apple stock, and they're still very much tilted bullish. You've got 40 buy recommendations, 18 holds, only 2 sells around in the via analyst commentary. I just wonder how the market has reacted, or what the investor reaction has been to the announcements yesterday. Were people underwhelmed, or were they still encouraged by the promise of what is to come in the future?
Yeah, it really depends on, of course, which analyst you're looking at in particular, because you say, of course, you've got a lot of buy ratings still in the stock or overweight positions. And those investors were, again, pretty bullish and still upbeat on what Apple delivered. The likes of Citi, for instance, are saying that they do think that Apple is making a clearer, stronger case around Apple Intelligence. Wedbush, for instance, another bull on the stock, and they're saying that it's actually going to be one of the most successful iPhone launches in history. And they're very optimistic, really, on the outlook for demand, and they're saying that the approach that Apple is taking here, what they're deeming a careful rollout of AI over the next 6 to 9 months, is the right approach. On the other end of the scale, of course, you do have those more underweight positions. Barclays, for instance, is one of those, and they're saying that given you've got that delay in the AI features, we don't really know exactly what the demand is going to be over the coming quarter or two, and they're also disappointed by the lack of new hardware features. Bloomberg Intelligence, for its part, of course, doesn't have a buy or sell rating on the stock. stock. But still, they're saying that this iPhone 16 design change is not going to be enough to warrant some sort of big upgrade cycle or refresh cycle. So some of the different views coming through. But yes, it does seem a lot of people still very optimistic on the outlook for Apple.
Yeah, it certainly appears to be the case. Annabelle, always good to talk to you. Thank you very much. Annabelle Jewelers, our tech reporter. Coming up, Mario Draghi is calling for 800 billion euros of new spending a year by the European Union. More from the former ECB president next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh today. Former ECB President Mario Draghi is calling on the European Union to invest as much as 800 billion euros more a year to transform the economy. In his long-awaited report, he also called for a commitment to regularly issue common bonds to make the bloc more competitive with China and the US.
For the first time since the Cold War, we must genuinely fear for our self-preservation. And the reason for a unified response had never been so compelling. And I am confident that in our unity, we will find the strength to reform. The investment needs that all this entails are massive. The investment share will have to rise by around 5 percentage points of GDP to levels last seen in the 60s and the 70s.
And Monks is opening an office in Saudi Arabia and relocating its Middle East headquarters to Riyadh from Dubai. The operating brand of Martin Sorrell's S4 Capital is betting on the kingdom becoming the more dominant place for business in the region. The new headquarters will focus on collaborating on advertising solutions with local businesses, startups, tech innovators, and educational institutions. Saudi Arabia now requires firms to have their Middle East headquarters in the country to be eligible to win contracts with the government. And Saudi Arabia's spend on Vision 2030 projects has reached $1.3 trillion over the past 8 years. The volume of projects is up 4% from a year ago. About $164 billion worth of real estate contracts have been awarded since 2016, with the largest chunk of that money going to NEOM on the Red Sea coast. And coming up, we're going to be talking more about some of the developments in fixed income and the outlook for oil. This discussion next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Investors await U.S. inflation data for fresh clues on the magnitude of next week's expected Fed rate cut. Chinese biotech firms in the crosshairs after the U.S. House passes a bill blacklisting them and their American subsidiaries. Plus, Apple unveils its latest iPhones featuring modest hardware upgrades and AI technology that isn't quite ready yet. Well, good morning again. It is just after 7:30 a.m. in Riyadh over here, 8:30 in Dubai. Let's get you caught up on some of these markets and how we've been faring, because we are seeing again a bit of stabilization come through for U.S. equities, moderately in the green, though the futures are leaning towards negative today, down about 9 basis points. Big data coming up. We've got that CPI number to watch out for. Market is pricing in 0.2% month to month for the prints. But if we do get a downside surprise, then perhaps it could cement expectations of that 50 basis point cut out of the Fed next week. Also keeping a close eye on 10-year yields, trading at 3.7 over here. So not a lot of movement, but we have come a long way since those JOLTS figures a week ago, about 30 basis points lower now. USD trading marginally positive, and then Brent also just below $72 as we keep a close eye on the developments with Storm Francine. But it is also a big day for U.S. Politics, with the big debate set to take place between Trump and Harris this evening. Just a quick look here on our terminal chart today on how the average polling has evolved over the last couple of weeks. And you can see, if you just look at the average polls, Harris has maintained her lead over Trump. Will that continue out of this debate? That is a big question, of course, but you saw clearly a couple of weeks ago that she managed to overtake him as soon as she became the official nominee for the presidential ticket. So something to watch out for as we head into that debate later this evening. But for now, let's also check in on how markets in Asia are faring. April, some big data coming through from China overnight. Tell us more.
Yeah, we got the trade numbers for the month of August. On the imports front, it was a big miss. So this is reinforcing how weak domestic demand is in China. Of course, this follows a day ago what we got in the CPI and the PPI front. And amid all this, despite the exports numbers beating, we are seeing the CSI 300 heading into the lunch break with those declines. And it is approaching the lowest close in about 5 years, since early 2019. And the concerns here are that the market slump could reinforce and, prompt further erosion of the business as well as the consumer confidence in a sort of deflationary feedback loop. So among the things that we're watching in the region, but of course, in the rest of the Asia Pacific, we're seeing a bit of stabilization after yesterday's rout. Jumana.
Avril, thank you so much. Now on to some banking news that has come through. HSBC is considering combining its commercial and investment banking units as part of the CEO Georges Hedri's push to eliminate overlapping roles and cut costs. Sources say the combined division would boast 90,000 employees and become the bank's largest revenue generator, contributing about $40 billion a year. So for more on this, Bloomberg Intelligence senior analyst Matt Ingram joins me now. First of all, Matt, what is the justification for them ostensibly combining investment banking with commercial banking? Because they're two completely separate units.
Yeah, g'day, Jumana. Look, that's the billion-dollar question. I think it's about costs. Ever since Stuart Gulliver took over in 2010, there's been a constant restructuring and a constant cost focus. The bank is still bloated versus peers on costs, and so I think that's the lens they're looking through. The challenge, of course, is how to cut costs without cutting flesh. We think there's a real risk that overlap in the middle, certainly not the small clients or the big ones, but the overlap in the middle that you might cut the wrong risk relationship manager, that would cut revenue as well as cost, and that's clearly the risk. But it's certainly a strategy that's a lot more than the fine-tuning the CEO discussed when he was first announced a bit over a month ago.
Yeah, and it certainly appears as though the new CEO has big plans for how he wants to shake things up. We've been reporting on some of the middle management cuts that seem to be coming through as well. How has the market taken all of these steps or anticipated steps?
Look, I think the cuts are expected, and so this isn't new news. As I said, this restructuring is nearly 2 decades old. What I would say is that the market would be like, wow, this doesn't sound like the fine-tuning that the CEO discussed a few months ago. He said that basically middle management would be cut, that some of these geographical management teams would be stripped away. This is a fundamental restructure of the business, a fundamental combining of 2 of the biggest earners. So I think this is a surprise.
Yeah, and kind of similar to what JP Morgan did as well. So we'll see, of course, if it actually comes into fruition. Matt Ingram, thank you so much for joining us. That was Bloomberg Intelligence senior analyst. Now for a look at some other stories we're following. Bloomberg has learned that U.S. regulators are set to slash increased capital requirements for big U.S. banks. Sources say the lenders will face a 9% jump in capital requirements, marking a dramatic retreat from the original plan calling for a 19% increase. The sharp reduction comes after banks unleashed one of their fiercest lobbying campaigns after the proposal's introduction last year. And Australia's banking regulator has proposed lenders phase out the use of AT1 bonds, the securities that were wiped out after the Credit Suisse collapse. It wants a transition to start from 2027, with all current AT1 bonds on issue to be replaced by 2032. APRA says the changes support the financial system and are aimed at reinforcing confidence in the safety of deposits at time of stress. And Goldman Sachs CEO David Solomon is warning that businesses for the bank's trading unit is on track to drop 10% from the prior year. That is led by declines in the fixed income business. The company will also take a $400 million pre-tax hit in its consumer business as it moves away from its credit card tie-up with General Motors.
With respect to trading, I would say that with FICC and equities, we had an extremely strong third quarter in 2023. And given this quarter, given what I'd say is a more challenging macro environment, particularly, in the month of August, that business is trending down close to 10%, largely due to FICC.
All right, let's move on from talking about the banking sector and talk more about oil and what has been happening there, because we are seeing some steadying. Oil's holding on to one-day gain as a risk-on tone returns to wider financial markets, benefiting commodities, including crude. Brent is steady, around $72 a barrel after rising more than 1% on Monday, snapping a 6-day losing streak. But what a losing streak it was. The oil complex down almost 8%, 9% over the course of the last week or so. So for more on this, happy to say that Amol Shitole, head of fixed income at Mashreq Capital, joins me now. First, maybe let's just start with the price action that we've seen in oil, because it has been quite a notable decline. In fact, so much so that the OPEC Plus had to release a statement and push back their decision to put extra oil barrels to the market. So many people are taking note of the price of oil. But what I noticed is who hasn't been taking note are fixed income investors, because despite all of this, MENA fixed income continues to rally.
Morning, Jumana. You're absolutely right. I mean, if you look at the oil price forecast, I mean, market has turned quite bearish in the last couple of weeks. And it's for obvious reasons, right? I mean, the China demand is falling. If you look at refining margins out of Europe and Asia, they're collapsing as well. And geopolitical risk premium is looking like it's fading over the last few weeks as well. If you look at the 6-month, spreads, time spreads for Brent, it has come down to $1 from highs of $6 we saw in the second quarter of this year. So clearly, market is looking like going to be oversupplied toward the latter part of the year and early next year. Having said that, as you correctly pointed out, Middle East is the higher quality portion of the EM. If you look at the average credit quality, is significantly higher than the rest of the EM. And we have seen the broad-based rally in the market, which is really following U.S. Treasury yield moves over the last 2 or 4 weeks per se. If you look at Bloomberg US dollar bond index, it's up 5% in last 2 months, which is following 60 basis point decline in 10-year U.S. Treasuries towards 3.7%. So yeah. Good time to be a Gulf investor at this point in time.
Yeah, so let me ask you this. The rally that we're seeing in MENA fixed income, are we rallying because duration and the U.S. is rallying, or are we rallying because credit spreads are also tightening as well? Is this a credit move or is it a duration move?
I mean, most part of the recent move is duration. As you can clearly see, the duration for the GCC MENA bond index is about 6.5 to 7 years. The credit quality is A. So most times when U.S. Treasuries rally, the Gulf market is the biggest beneficiary within EM because of the longer duration. And some of the names in the region have rallied by 7 to 8% at the longer end of the curve in AA and single A space, while index itself is up by 5.5 to 6% on a YTD basis.
Amol, is there any level for the price of oil where Gulf fixed income investors will actually start to get nervous? Because so far, the price drop, again, as we've spoken about, has been completely overtaken by broader fixed income dynamics that are stemming from the U.S. But if, let's say, oil drops to $60 or potentially even $50 if you have a massive gamma move, say, to the downside, will there be a reaction in MENA fixed income?
Clearly, I mean, oil is as important as U.S. Treasury rates for Gulf market because of the dependence on oil for revenues as such, and less diversification in non-oil sector as such. Having said that, 4 out of the 6 GCC sovereigns are strong investment-grade stories. We are expecting Oman to be investment-grade story in next 12 to 18 months. So that just leaves Bahrain as the only high-yield play. And I think Bahrain is something which has more correlation to oil because of the weaker credit quality and higher break-even oil prices. Having said that, the names like UAE, Kuwait, Qatar, they're pretty solid in terms of rating, and they have favorable break-even oil prices, even if oil prices go to a 60. So I think, barring some of the weaker stories, I think GCC as a whole, I think should not be much concerned, even if average oil prices, have to go at mid-60s for some point for the rest of the year, in my view.
Yeah, interesting. Okay, let's pivot to the here and now, though. Big CPI number coming up today. How is that going to set the tone for where fixed income trades from here? If it comes slightly weak, do you think this rally will continue? At a big level, we agree with the market pricing of 250 basis points of rate cuts through the cycle. If you look at Fed fund futures, so for future, we're talking about 3% kind of Fed fund rates, in a couple of years' time when this rate cutting cycle ends. And there are several reasons for that, including critical job market indicators which are deteriorating. I think. When it comes to near term, I think we're not paying a lot of attention on month-over-month, macro data prints, but then really looking ahead over 12 to 18 months, trends in quit rates, vacancies to unemployment rates, things like those, and really positioning for, that period of time. So I think market has run up quite a lot. Having said that, there's still some juice left in duration in our view. I think U.S. yield curves will continue to bull steepen until U.S. election, if not beyond, and that would mean it just is the right strategy to stay bullish bonds and bullish duration in the near term. Okay, excellent. Good to hear your views as always. Amol Shitole, Head of Fixed Income at Mashreq Capital. Thank you so much for coming on our show today. Well, coming up, Kenya's High Court grounds a plan to allow Indian billionaire Adani to operate the country's biggest airport. Stay tuned for all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh. Now, let's turn our focus to Kenya now, where a court has suspended a government plan to allow Indian billionaire Adani's company to operate and invest in the main airport. Officials are arguing East Africa's busiest airport needs an urgent upgrade and a cash injection, but the High Court has suspended the deal until it rules on the matter. So for more on this, Bloomberg's Ndiro Ganga joins me now from Kigali. Ndiro, first of all, what are the details of this very hotly contested Adani proposal? Where are the government's reservations stemming from?
Jumana, what we know so far is that this deal will see Adani take over, operate, maintain, and modernize this airport. They will be building a new passenger terminal. They'll be building a second runway, and they'll also be refurbishing existing facilities. And this is going to be very capital intensive. It will take about $1.85 billion. And in the first 5 years, they'll be injecting about $830 million just to get the ground going and start on these projects. And if you profile Adani, they have the financial muscle to do this. I mean, they're owned by the second wealthiest man in India, and they have a portfolio of 8 airports dominating up to 50% of top 10 domestic air routes in that country. However, they're not short of controversies and also opposition, some of which is coming from Kenya, from the Kenya Aviation Workers Union, who've downed their tools in protest of this deal, bringing airport operations to a standstill.
Well, irrespective of whether it actually passes or not, or whether the Adani Group are successful, what are the actual implications of the deal in the first place?
Adani is very ambitious in their projections that they've done on what the benefits will be from this deal. They're projecting that revenue will grow up to $1.2 billion by the year 2054 from the current $163 million. They're also projecting passenger numbers to grow to 33 million and also cargo to grow to about 8 million tons from the current 500,000 tons that they do every year. And they're also willing to make concessions. They want to onboard Kenya Aviation Workers Union employees, something that was a bone of contention because job security was not guaranteed. But these workers are not on board yet. If anything, they want government intervention. But the government is between a rock and a hard place because they don't have the financial muscle to pull this. Be that as it may, the Kenyan airport needs upgrades. They are grappling with flooding, they're grappling with blackouts, and they're operating in a region where most of the airports are functional. So if they're to have any hope of becoming the aviation hub, something has to give.
Bloomberg's Indira Ganga, thank you so much for bringing us that report. Now, also coming up, big tech on trial. The EU's top court will deliver 2 final rulings on Apple and Google. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh. Now, the EU's top court will deliver 2 final and binding rulings later today involving Apple and Google. The ruling will determine whether Apple owes a €13 billion tax bill to Ireland and if Google abused its market power by giving special prominence to its own price comparison results in online shopping. So for more on this, and not just in Europe, but more broadly speaking, the US as well, Peter Elstrom's Bloomberg's executive editor for Asia Technology joins me right now. Peter, good to have you with us. Just talk us through how significant this ruling out of the EU High Court is going to be, especially because it's been going on for some time now.
Yeah, that's exactly right. I'd say more broadly, the legal cases for big tech are really piling up. You're seeing it in Europe now. You're seeing it in the U.S. also, which we'll certainly talk about too. But these cases in Europe are very important for a number of different reasons. First, the case against Apple is really a tax case. What they've been arguing is that Apple, like so many companies, shifts around where it declares its profits, and usually it tries to do that to be able to get some financial benefit from it. In this case, the EU is arguing that Apple pushed it too far, that they took advantage of Ireland's tax practices to be able to save itself substantially on taxes, and they want Apple to step up and pay this €13 billion fine that you were talking about. On the Google side, it's more a penalty for some of the actions that they've taken with their online search engine. Of course, Google is by far the most dominant search engine out there, and the EU is arguing that it took advantage of that to be able to direct traffic specifically to its online shopping network. So the EU is looking for another big fine from Google. So you got a pair of cases here that are very significant financially, but also legally, because this is going to set some precedent about how these big tech giants can act in Europe and perhaps the rest of the world too.
Yeah, so it's not just the EU, of course, but also the antitrust trial in the US is just beginning now. And I thought it was interesting to see one of the comments put out by one of the attorneys, the Justice Department's attorneys, saying that Google is not here because they're big. They're here because they use their size to crush the competition. So similar theme also playing out in the US.
Yeah, that's exactly right. So the U.S. Justice Department has been going after not just Google, but also Apple over its market power. There are a lot of big tech companies that have this kind of market power. So what Google is facing with the U.S. Justice Department right now is an investigation into whether it abused its market dominance in display advertising online in order to take advantage of the situation and extract extra profits for itself. This comes just a month after the Justice Department won a big case against Google for its practices in the online search area, where Google lost a landmark case there. On the display ad front, what the Justice Department is arguing is that Google owns enough of the steps along the way between when you go online and when those advertisements show up in front of you, that it's extracting extra profits by taking advantage of media organizations, other kinds of organizations to boost its own profits. It's saying that Google has dominant share on the supply side. That's helping companies come up with the digital ads that they're going to put online. The middlemen, where they direct those ads, and then the supply side, where it can actually push around the media organizations, the other organizations that are going to use those display ads. So now the Justice Department is diving into this, and it's trying to prove that Google is actually abusing that kind of dominance it has online.
Yeah, and to illustrate that, they've also done a deep dive into some of the companies that Google has acquired over the last few years. DoubleClick is one of the names that comes up. What ramifications do you think these types of rulings or investigations are going to have on big tech's ability to continue acquiring and building up their empires via M&A?
Yeah, you're exactly right. Yeah, the Justice Department is taking a close look at this acquisition of DoubleClick, which dates back to 2008, a long time ago, especially in the tech industry. And they're arguing that because Google has been able to abuse that power, there has to be some sort of remedy. Now, what the Justice Department can seek, what they can actually get, maybe two different things here. But they have talked about trying to break up some of this dominance that Google has in the online ad space. There could be financial penalties of some sort. But I think what the companies on both sides of this equation would really like is to see some sort of substantial steps so that Google and more broadly the big tech companies are not able to extract these kind of monopoly profits from the industry itself. So the media organizations, News Corp is one of them that has sort of stepped up. Gannett, the big newspaper organization in the U.S., has also talked about how this is actually hurting them because it's depressing their profits at the same time that it's allowing Google and some of these others more broadly to be able to take some extra profits themselves.
Yeah, such an important story. Always good to keep an eye on what's happening on the policy side of things. The Bloomberg executive editor for Asia Technology, Peter Elstrom, thanks so much. A very quick look at futures before we head out for the day. Things are stabilizing. The big event is going to be that CPI print out of the U.S. Will we get a disappointment to the downside? What does it mean for the Fed next week? All answers we'll talk about tomorrow. But that was Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh.